Welcome to Everyday Money Matters, where we explore practical tips on saving and making money in your daily life. Get ready to embark on a journey towards financial empowerment and smart choices. Subscribe now and let's make every day count for your wallet. In today's video we will discuss, are you financially prepared for an emergency? Now let's get to it. When faced with an unexpected $1,000 expense, more than one-third of Americans would borrow the money, according to a new survey. That may include tapping their credit cards, seeking money from friends or family, or taking out a personal loan. Most would not turn to cash savings because they don't have it, the personal survey found. Fewer than half of Americans, 44%, say they can afford to pay a $1,000 emergency expense from their savings, according to more than 1,000 respondents who participated in the survey in December. That is up from 43% in 2023, yet level when compared to 2022. We're just not wired to save. Our brains are instead programmed to focus on our immediate needs. Saving goes against our natural instincts, but there are steps you can take to rewire how you think about savings and meet your goals. Almost two-thirds of respondents, 63%, say high inflation has left less room to save for emergencies. Meanwhile, just 19% say they are saving more because of high interest rates. The pandemic, which prompted millions of Americans to seek help from food banks amid widespread layoffs and furloughs, is one example of how a sudden income loss can make it impossible to pay for everyday needs. Living paycheck to paycheck has become the norm for many Americans, research has found. That leaves people little to no opportunity to save. To build a cash cushion, the best advice is to start with your current budget and adjust your spending. Where you can, save first and spend second. Experts generally recommend having 3 to 6 months living expenses set aside to protect against unexpected events. Yet, year after year, surveys show building meaningful emergency savings remains a difficult hurdle for many Americans. To successfully boost emergency savings, it may help to reframe the way you think about that goal. What may help to overcome that is to visualize, which helps create an emotional experience that can help activate behavioral change. For example, picture a worst-case scenario such as losing your job. If that income stopped tomorrow, how many months would you have before your belongings are out on the street, or until you have to call a friend or relative to beg to stay with them? Or how long before you start withdrawing money from your retirement funds? How long would it delay your retirement? By tapping into how those situations would make you feel, you become emotionally invested in taking action to save more. The next step is to identify ways to stop spending money and direct it toward an emergency fund, which admittedly can be a painful exercise for many Americans. Instead, many people tend to think of their credit cards as an emergency fund, which may lead them to pay interest rates of 20% or more if they use it to cover an unexpected event and do not pay it off in the first month. Likewise, if you keep a surplus of cash in your checking account, you're more likely to spend it. Another way to help encourage savers to take action is to name the emergency fund something emotionally triggering, such as Financial Security Fund or Financial Freedom Fund. By labeling the money something that's associated with an emotional attachment such as financial security, you'll be less likely to dip into that money to go out to eat. That psychological barrier may help protect the emergency fund money. If you found this video helpful, give it a thumbs up, and share it with anyone who might benefit, and don't forget to subscribe. Thanks for watching, see you in the next video.